Okay. There's a lot that goes into these things. A lot of prep work, administration, a lot of administrative work here. Got to get done here. All right. It'll just take a couple of seconds here to get this done. That's okay because people are still coming online here. I see a lot of people still. Okay. There's a lot. Okay, that's going, and we are all set to go. All systems go. One more thing. I got to hit the record button and off. All right. Good evening, everybody, and welcome to DayTradeSPY.com's weekend review. All right, it's Sunday, May the 31st. Yeah, the last Sunday of the month, isn't it? And we're into the summer. Okay. Boy, time is slipping by so fast. My name is Hugh, folks. There he is right there. I don't know if you can see. I'm going to just raise the blinds here. Maybe, I hope you can see me, just can get a glimpse of the beautiful sunshine. I like the sun. You know, I've always been a real proponent of sunshine. I like sunshine. Sunshine's good. Unless, of course, it blocks the view. Oh my gosh, my forehead is shining in there. Oh, that's very sunny. Sunny, right? I guess I should call myself sunny. Sunny and bright. Okay, all right, so looking good. You can see the beautiful sunshine out there. Isn't that funny? Just a couple months ago, it seems it was all dark and gloomy, and now we're, broadcasting from the beach. We're at the beach house, so good to have you all here. Okay. And again, my name is Hugh. What is this? 834. I think we're at 835 now, to be honest with you. But who's counting? Folks, any questions at all, put them in the questions box. You'll find a little icon on your Zoom dashboard. That's where it's at. And let's move along here. Tonight, what we're going to do is we're going to talk about last week, review that. We're talking about the upcoming week. We're also going to give you a little 2-minute tutorial, answer your questions. And then I have a little contest for you, as we sort of do every week. The winner gets Triumphs and Tragedies. Triumphs and Tragedies. That's an ebook, 40-some pages, I think. True stories about people who've come through our system in the last, oh my gosh, 16 years. It's been that long. Wow, we're in our 17th year, folks. All right, here's the standard disclaimer. Give you a few seconds to read this. You have to have this on there just in case, you don't understand something. What you have to understand is that there's a lot of risk in trading options. Despite what anybody tells you, there's never an easy way of trading options. It's all a mental thing. But anyway, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know that. All right, so my name is Hugh. What about me? Why listen to me? Well, good question. Simply put, I'm a long-time trader, publicly been teaching this since 2010. Master some cool strategies from the trenches. When people saw me bringing home the toys, they said, Hugh, you got to show me what you're doing. You obviously must have won a lottery or something. I said, no, I'm just trading options. Well, you got to show me. They twisted my arm, coerced me, and put up a website and started teaching this stuff. And I really enjoy seeing the success of others. That is what really keeps me motivated. And I guess my motto, if you want to have a motto, if you want what I have, you got to do what I do. All right, it's just the simple truth, right? You gotta do what I do. So we'll see what happens here. I've been doing this for a long time, and I kind of started. Okay, I know a lot of. If you're new, folks, put it in the questions box that you're new, because I know a lot of people have heard all this. I don't want to kind of repeat myself, but I know there's a lot of new people on all the time. But I got to tell you, I never went through school for this. Excuse me. I kind of found this whole program by accident. I used to be an internal auditor, and what happened was I used to invest my money, right, with a financial guru not a guru, an advisor, and he would put my money into whatever it was. I didn't really know. I mean, I sort of relied on my good buddy Mike because he's my friend, right? My friend. Oh yeah, he's gonna take care of me. Okay. Anyway, turned out by the time I realized it wasn't happening, about half my capital was gone. Now, I'm not a brain surgeon, but I do know that if you lose 50% of your money, you have to make 100% of it back just to break even. Forget any growth. I got pretty upset about it. Essentially told him to just cut me a check for whatever is left. I'll be by the next day to pick it up. And when I remember driving back from his office, I thought, This is unbelievable. I used to be internal auditor. I know a little bit about risk. I know a little bit about numbers, that sort of thing. So surely I can lose the money just as easily as anybody else, right? But I learned a couple of things that with the power of the internet, we all have information at our fingertips just like anybody else. Really, nobody's at an advantage. The internet is the great equalizer. That's what I call it, the great equalizer. Everybody's on the same plane, especially now with AI. Really, everybody's on the same plane, right? And and I also learned that nobody cares or should care more about my money than me, obviously, and that goes for each and every one of you. I learned another lesson too. Can't remember now what it is. Anyway, I figured that I got to learn some stuff. So I set out to learn all I could, took many, many courses, different things. And then with every step of the way, I learned a little something. I learned that a lot of these guys that were espousing their courses and their amazing systems, and there were a lot of them back in the days. They're very expensive, by the way, back in the days, back in the day. And a lot of them, what happened was they never traded. They would stand in front of the crowd, and maybe you've seen this where there's a seminar, you go to the excuse me, go to the free seminar, and they're talking about trading and making all this money, and they're doing so great and everything else. And then I would put my hand up, so Mr. Presenter, you're trading this as well. And do you know that all the times they always said, no, I don't trade it. It's too risky for me. Well, thank you very much for your honesty. So you want me to trade what you're telling me, but you don't have the faith and confidence in your own words to trade this yourself. That's right. I would close my books and leave the room. The one time I was even asked to leave, I said, "Hey, not a problem. I don't want to stay here." I couldn't believe it. Um, I learned a lot of stuff. I learned that all of the indicators that they give you that you have, they're all lagging indicators. There's no leading indicator because nobody knows what the market is going to do. The market is the market, very efficient. And the market can change at a dime. And it's all expectations. It's, different things about interest rates and how the pundits perceive the news, and then how they twist the news, right? And how the market perceives what the pundits say. And so there's a lot that goes into it. I notice that there's not any one system of rules or whatever that you can follow 100% of the time and and not and not get burned at some point. Sometimes rules are going to change, and so we do the best we can, and we always try and look forward to the market, see what happens. But yeah, I learned a lot. But most of what I know, I learned from the trenches, deep down in the trenches trading. That's the school of hard knocks. And those are the lessons that stay with you, right? And so I learned a lot of things, and mostly about myself, emotional control. I found that's really probably the number one thing in trading is emotional control. And, and don't get excited one way or another. Some days you're going to win, some days you're going to make a lot of money, other days you're going to lose some. But just maintain that even keel and never trade more than you can afford to lose. I mean, there's a lot of things I learned. But anyway, when I started, accepting certain key things to be true, for example, the enemy is not the stock market. In fact, it's your best friend. I can prove it to you. At the end of your trading day, go back to the charts. Go back to your options charts and see all the many opportunities the market gave you to make some pretty good money every day. So the market's not your enemy, it's your best friend. You know who the enemy is? That person standing right in front of the mirror, yourself. That is the enemy. Anyway, as soon as I recognized that and started working with the market instead of against it, immediately my fortunes changed. Anyway, I started making some pretty good money, and that's when people started saying, Hugh, show me, show me, show me. That was over 16 years ago, and never looked back. So in 2022, we got the attention of Eagle Financial Products. They bought us out, hired me back, and then they brought in John Johnson for my co-host in the trading room. And John is my co-host, and he's an excellent trader. Let me see if I can pull up his credentials here. Litigation lawyer, his former profession, and he turned into an options trainer. He loves trading as well, and he's highly acclaimed in industry publications, uses highly effective tools to determine trades. His philosophy is very simple. Take what the market gives you. And his definition of success is doing what you want when you want. John Judson, great guy. Now, so John uses his set of indicators, and I use my set of indicators. All right, we have different sets of indicators that we use when we trade. Now, when our indicators unite, so he might say, I think the market's going to go up, and I look at it and say, yeah, I think it's about to pop to the upside as well, from what I see. So we have a little saying that when our indicators unite, our trades ignite. Our trades ignite. There it is, right there. All right, so very important. Very important. And that is the strength of what we do in the trading room. You have two professional traders with 45 plus years combined experience in the market, looking at the same thing from a different angle. And I think that's really important. I think that is really, really, really important. When you have that kind of mentorship, I'm telling you, that's where it's at. All right, you're not looking at any one person's opinion on things. You're looking at the synergy of two people. The synergy, that's 1 + 1 = 3. And I think that's one of the reasons for our success. Conversely, I might be looking at a trade and he'll say, I don't know, watch, or like he might say, well, I'm looking at going to the downside with puts. And I'll say, be careful, John. I see some pretty strong support at this level down here, and I'm just afraid of the bounce. Just so you're aware. And he'll say, yeah, I think you're right. And then he might stay out of a trade, right? And I might have saved some grief with a move to the downside. So are we 100%? No, nobody's 100%, but we're pretty close to it. Anyway, folks, let's move on. All right, let's move on. So what happened? Spy in the Market. This is our weekly newsletter. It goes out every Thursday. Brief 3-minute read, light, relevant, entertaining. All you have to do to subscribe, go to our website, DayTradeSPY.com. And when the little pop-up comes up, leave us your email address and we'll get you on the list. You're going to get Spy in the Market. All right, delivered to your inbox every Thursday. This week's topic, fear of missing out. FOMO. Excuse me. That's my number one hurdle to to jump over. FOMO. I always have this fear of missing out. Oh my gosh, there's a party going on and I'm not in it. You feel like you're at a party and you're on the outside, right? Outside of the house and looking in the window, everybody's having a good time. They're all dancing and having a great old time, and you're on the outside. Yeah, that's not a party. That's not fun, right? That's what you feel like. So you jump back in. Then you find out, oh, why did I do that? You have that feeling? You ever have that? FOMO. Oh my gosh, that's the worst one for me. Anyway, that's what this week's topic is. By the way, these newsletters, they're not long, drawn out, boring newsletters. You ever get those? I hate those as much as anybody. You're reading on and on. You think, oh, please get to the point. Please get to the point. Life is too short to go through all of this fluff. I don't like fluff, so I get to the point. 750 words. Takes you about 2-3 minutes to read. All right, FOMO is what we're going to talk about this week. So let's take a look at what happened this week. Here is the market. All right, what happened? Well, Monday. All right, Monday was day off. Markets were closed for Memorial Day Monday. On Tuesday, SPY rose, driven by massive semiconductor and AI rally. You're going to hear these words come up a lot these days. AI, artificial intelligence. Or if it doesn't know what it's talking about, it makes it up, and then I call it authentic ignorance. Anyway, I made that up. Micron jumped 19%. That was a company you haven't heard from a while, but all of a sudden they're in the game. Everybody's jumping in the game, pushed the company over a $1 trillion market cap. There's a few companies now worth over $1 trillion. I'm going to just see, just out of curiosity, what companies are worth over $1 trillion. Let's see what we have coming up here. It's funny how Google search can give you all of this information very quickly. I think the internet's going to catch on. What do you think? The big one, folks, is NVIDIA. I think they're like a $5 trillion company. Alphabet, Google, Apple, Microsoft, Amazon, Meta, Broadcom, Taiwan Semiconductor Manufacturing, TSMC, world's largest semiconductor foundry, Berkshire Hathaway, Tesla, and now what, Micron. These companies are all worth over $1 trillion, according to Google. Wow, that's a lot of money. Okay, that's Tuesday. On Wednesday, continued AI rally, falling oil prices, and a report of a Middle East ceasefire propelled SPY to yet another record high, after which profit taking took hold, still closed at a record high on Wednesday. On Thursday, we had a second consecutive day for record prices on SPY, driven by a robust tech sector, a softer than expected personal consumption expenditure report. PCE, that is the Fed's primary indicator that they use to determine whether they should raise rates, lower rates, or hold on to them the same. All right, that's what happened on Thursday. And on Friday, S&P 500 hit yet another record high. Fueled by a massive surge in the tech sector, optimism surrounding a potential U.S.-Iranian peace deal. So this headline news keeps coming up. AI keeps coming up. This is what it's all about these days, even more so than oil. Yes, oil has an effect, but it seems to be taking a back seat to things like AI and what's going on in the war. Here's a look at the seasonal chart. For those unfamiliar with it, the blue line is where SPY is now, and the red line is the average of the last 5 years' daily close. You can see we're zigzagging, but we're on a slow trend to the upside. Excuse me. And if you look at the last 5 years, SPY rose about 7 points last week. Going into the following week, we rose about 3 points. So we're still on an upward trajectory. So what happened? Well, markets closed higher on hopes of a U.S.-Iranian peace deal. Equities hit recordized, logging its 22nd record this year. If you're sitting in any 401ks or anything like that, you'll see that in all likelihood that your equity continues to rise. It's not a bad spot to be in. Strait of Hormuz may finally reopen, easing world oil prices. That'll be good. And even though uncertainty persists, growth looks resilient, underpinning consumer confidence in a booming business investment. AI-related outlays continue to contribute to meaningful growth. GDP reported robust profits mirroring equities, and inflation remains hot, but the Feds appear to be on top of it. They are flip-flopping on the June decision. It's actually pretty interesting because I look at the which way they're leaning. And it's about 98, 99% chance they can leave rates the same. But that difference of point something to 1.5%, it flip-flops to raising rates and lowering rates. So there is some indecision still with the Feds on what to do with the rates. And that decision is going to be coming up, I believe, at the end of June. Let me just take a look at that and see when the Fed announcement's going to be on that. We should know that because we're just starting June tomorrow. So let me take a look and see when that Fed announcement is going to be. And real quick, take a look here. I just want to flip through this real quick here. Bear with me. I think it's probably going to be near the end of June. All right. I'm already in June, the second week in June. Okay, let me take a look here. That's probably the third week. Is it the third or the fourth week of June? Okay, it's coming up June the 17th, Wednesday, June the 17th. That's when the Feds are going to release their latest Fed funds rate. All right. All right. So we're going to talk about here. Talking about uncertainty persists. AI-related outlays, yes. GDP reported robust profits from equities. Inflation remains hot. Feds appear to be on top of it. Headlines remain noisy, but the growth stays solid. Here's a chart. AI investment is providing a boost to aggregate U.S. growth. Latest surge resembling the 90s IT investment, which you can see down in here. It's just shot up. And then we had COVID. COVID hit and everything just kind of dropped. All right. And came back up pretty quickly here, bounced around pretty good. And then, of course, there's a lot of talk about is, oh my gosh, AI, it's a bubble. I don't really believe it's a bubble. I'm not convinced it's a bubble. I believe we're just on the cusp of this whole AI thing. We have no clue what AI is capable of. Every day it seems there's something more and more and something bigger and better coming out with AI. It's what I'm concerned about is how many jobs are being lost. There are a lot of companies that are slashing employees in an effort to save money. And of course, what happens is because AI is taking over, right? Excuse me. A lot of companies are firing, letting go their employees because AI is taking over. So what's happening is that's boosting the value of the companies. They're saving all that labor. They're producing more for less input, more output for less input. They're boosting of the values of their companies, and that's actually good for the stock, right? And that's why you're allowed to see a lot of growth in a lot of companies because of this whole AI thing. And we had the industrial age, right? And then we had the internet age, and now we have the AI age. And I don't know what's next. I don't know how far it's going to go, but I don't believe it's a bubble. So maybe I'm wrong, but I don't see it. And a lot of companies are putting in a lot of money into AI, a lot of, investing billions and billions of dollars. Um, U.S. firms continue to enjoy strong margins in the post-pandemic economy. And again, a lot of it's got to do with AI, and they're using AI to their advantage. I know in all sectors. Um, a while back, a major law firm in the U.S. Let go 1,000 employees, 1,000 lawyers, right? And all the big companies are letting people go like crazy. I think it was it Meta? I think it was Meta that just announced a massive layoff as well. Same with Microsoft; they're all doing it. So um, it'll be an interesting next little while to see where the dust settles on this whole thing. Anyway, let's move along here. The S&P 500 rose 1.25% last week. Year to date, 11.3%. It's only beat up by the Nasdaq, which is year to date 16.3%. That doesn't surprise me because all those big companies, they're all in the Nasdaq. They're overvalued. Excuse me. So whenever there's a change, it's going to appear in the Nasdaq companies first, all the big tech firms. But they are running very hot at 16.3%. Let me see if this growth continues into the rest of the year at this rate. They should be looking at about what, 39% for the Nasdaq, right? Take the 16.3% because it's at the end of May, divide that by 5 times 12. You're talking about a potential over 39% growth. Even the S&P 500, 11.3 divided by 5 times, if we continue at this rate, seriously, 27+% growth a year. That's pretty good. So I would say if you're sitting in some long-term, um, um, retirement funds or something that's linked to the S&P here or Nasdaq or something, hang on to your hats. Hang on to your hats. Now, if some major something happens and people say, well, if the bubble bursts, well, I don't see it as a bubble, but if it bursts and goes down, that'll be the first to go. But I think you're pretty secure with the S&P 500, so we'll see what happens. Week ahead, excuse me, with the ISM manufacturing PMI on Monday. JOLTS job openings on Tuesday. Wednesday is a little more newsworthy. ADP, non-farm employment change, and the Institute for Supply Management Services, PMI. Also, Treasury Secretary Besson speaks. And on Thursday, unemployment claims. Friday, some more news, average hourly earnings. Bureau of Labor Statistics, non-farm employment change, and the unemployment rate. As far as volatility is concerned, medium for, excuse me, Monday and Tuesday, high on Wednesday, back to medium on Thursday, and high on Friday. Also expect elevated volatility whenever President Trump speaks. Okay. Whenever President Trump speaks. Okay. Excuse me. Okay, some questions coming in. I'm just reading some. I'll read the questions later. All right, what do we got here next? Next up, our 2-minute tutorial. Kind of going fast. I don't want to keep you here. I know that for the longest time I keep saying, well, I want to let you guys go in about an hour. And I keep going to an hour and 10, hour and 15 minutes. I feel like I'm handcuffing you, I'm chaining you to your computer, so you have to watch this. I don't want to put you guys out that way. So I want to be respectful of your time. But anyway, I see a lot of names online here. Oh my gosh, awesome. Really good to see. Wow. Some old familiar names from going way back and some names that are new. And it's pretty cool. Very, very cool. Okay, I get lost in nostalgia pretty easy, folks. Some of these people in the session have been here for a long time. Alex F, my buddy, I think he's from the Vancouver area. He's been with us for years. Who else do we have? Edward S. Oh my gosh, seriously. Jeff S. Oh, Johnny L. Oh my gosh, Kurt. Oh, anyway. All right, 2 minute tutorial. We're going to talk about FOMO, fear of missing out. Yes, the fear of missing out. And what's this all about? This FOMO? Why am I so concerned about this? Or just center this. There we go. All right, fear of missing out, FOMO. And what is this? This is my number one. This is my number one hurdle. I still every now and then have this feeling, right? Oh, should have been in that trade. Oh my gosh, if only I stayed in a little longer, I would have made another. The other day I gave up $1. I sold too early and I felt so bad. Never look back, never look back. Well, let me tell you something. I know of only two ways to stop FOMO. There's only two. Now, there might be other ways, I don't know, but here's the only way I know that I have, that in my humble opinion and studies, figured out a way to stop FOMO. Number one, the one way here for me is first way. Number one, so it's a series here. You got to do these things, right? Number one, create a trading plan. You must create a trading plan. By that I mean, where are you? Where do you want to go? Um, are you looking to make $100 a day? I mean, everybody's going to be a very personalized plan. Create a spreadsheet plan. Get the date, what your opening capital is that you have to work with, and what you expect to make. Start very modest, say at $100 a day, which is not hard to make. If you buy 5 contracts, all you need is a 20-cent gain. You got your $100. Okay. And if you're trading, say, an average of say an option is maybe $3,500, like $3.50 to $4 or something, because you're buying time, right? It's a good place to be. Low theta loss, and if the market's going in your direction, that 20 cents comes up pretty quick. You get in, make your 20 cents, you got, get in, get out. Create a trading plan. Now, when you hit your daily target, so if your daily target starting out, let's say you're starting out, it's $100. I'm just going to get some numbers out of the air. Let's say your trading account is $5,000 and your goal is to make $100 a day. All right. And you're going to, let's say, trade 5 contracts at $3,500 each. Sorry, $3.50 each times 5. So you're going to be into that trade for $1,750, right? $1,750 for that trade on 5 contracts. So let's say you make your 20 cents. Well, you made your $100. Now you might want to get out of that trade at that point, but if you got $5,000 and you're taking that 1750 away, you still have 3250 with which to trade. Well, you might want to get into a small trade, just go for smaller gain. But I advise that once you hit your target, stop trading. All right, just stop trading. Now, as you get good at this and better, you might want to take another small position. You still have 3250 to trade, but I mean, keep it small. Do not trade the entire 3250 because your available balance will be 3250. This is your cushion. This is what you got to consider that you need in a reserve in case you need it. All right, so I'm gonna go back and just say stop trading. And that 3250, that's your reserve. Okay. Why do you need a reserve? That reserve is there if you need it. It's insurance against a bad trade. So let's say that first trade does go against you. You're going to need that 3250 perhaps to repair the trade, get it back on an even keel, buy more contracts. So you bring your average cost down, then your average target comes down. A lot easier to make your $100. You know, it's it's what's called opportunity cost. You're not, you're going to forego what that 32.50 would have given you, all right? Because you're going to feel that you've wasted that because you didn't trade it. It is not a wasted opportunity, all right? You still want to keep that trading into your available balance because it's only a matter of time. If you were to use it up, you get into that last trade and you don't have a cushion with which to repair the trade. Now you are at the total mercy of the market. All right. So what you want to do is you want to hit your target, part of your plan, right? And grow your account very consistently, methodically, gradually. It's that it's the tortoise, the turtle that wins the race. The rabbit runs up, but it's the turtle that wins the race. Consistently hit a conservative target, and that is what's going to grow your account. Now, as you build your account, that $5,000 is going to turn to 6, 7, 8,000. As you get more, right? As you get more capital, then your target is going to increase as well. So let's say your target. Let's say you're going from 5 to 6,000. Well, then you might want to shoot for say $150 a day because you're going to find that even with $100 a day on a $5,000 account, you're going to be going over that pretty consistently. Take the spreadsheet that you wrote down there and print it off. Manually write it in so it's in front of you so you can actually sit there, look at it and say, look at that. Today I made $167. Yesterday I made $150. Day before I made $120. And today I just, and you keep going up and up. So as you grow your account, eventually then lock in so for the next month. And if you'll say at $6,000, $7,000 your equity, then maybe increase your target per day to say $150. Don't go stupid on it. Don't go crazy, greedy, none of that stuff. Make sure it's attainable, reasonable, and don't panic if you don't reach it, right? Because it's not in stone. It's not something you must do or else. It's an arbitrary target. But that's the only way I found that you can grow your account by hitting it conservatively, very, very disciplined like that. All right. So, first way again, create your plan, follow our strategies. We have strategies we talk about in the trading room. Paper trade first, master the discipline. All right. If you're not familiar with what we do, get in there, learn our system, paper trade it. Once you get a good few paper trades in there, then swing over to real money. You'll see that it's actually not that difficult making $100 a day or $150 a day. Master the discipline through paper trading, then slide into real trading. Then continue to follow your plan for long-term growth. And it's going to work. It's going to work. All right. All right, let's move along here. Let's see, we have a bunch of questions. Okay. Oh, there's a question from Danielle. What's the second way? Oh, yeah, the first. Okay. The second way, the second way to get rid of FOMO. Yeah, there's a way of getting rid of FOMO. The second way, very easy. You will not have to worry about FOMO because the second way is when you blow up your account. Okay, that cures everything, including your trading. I can't tell you how many people I know blow up their accounts. They don't trade anymore. They go back to doing what they used to do and whatever it is they do. And might get a gig, might take on a gig driving Uber. You know what I'm saying? Uh, it's true. I remember getting into an Uber. I can't remember where, but I was talking about trading, and the guy told me, yeah, it's exactly that. He blew up his account. That will cure any FOMO you may have. You don't want to go down that path, folks. You don't want to go down that path. Get that FOMO under control. All right. Our 2026 goal, this is something that we're doing here. It's just a little project, as if we were to start with 5 contracts, trading 5 contracts since the beginning of January. And it's now the end of May, and we track all the trades in the trading room, John and myself. Everything that we narrate in the trading room, if you were to have followed along and only traded 5 contracts per trade, in and out, all trading room trades included, including losses, this is where you would be. Excuse me, you would have a current profit of $21,700 right there. That's where you would be. Had a bit of a loss here on the 28th, was that Thursday, and then John had one on Friday, $95. But all in all, we've had some pretty good days here, some pretty bad days, some good days. Maybe it's not we're exactly where we want to be, but considering the situation out there, some pretty trying times in the market these days. I know a lot of people are staying out of the market because they're a little fearful of the uncertainty. But that said, the market continues its upward trajectory, and we try and stay with the longer term trends. Get in, make a few cents, get in, get out, and it's been pretty trying. It's been fraying our nerves. I'm not going to kid you. It has been stressful and definitely challenging at times, right? And sometimes you take losses, but even if you took losses with us, you'd still be up $21,700, and that's not a bad place to be. So, all right, let me take a look here. What's going on here? I think this is wrong here. This one is wrong where I lost 1240. I gotta check the price. What is this price here? Price got a 543. That's not right. I gotta have to go back and see what that's all about. May 20. I better check the May 28th. I gotta check on that. Check. I'm just making a note of myself. That doesn't sound right. Sell time. Okay. All right, moving along. Trading room. I'm going to talk about a trading room, folks. Trading room. This is where the magic happens. Hosted by John and myself. Like I mentioned earlier, we have over 45 years of combined experience in the stock market. That's a lot. That's more than anybody I know. Okay, that I know. I personally know. Um, and the trading room is interactive. These are learn and earn sessions. It's not a watch Hugh and John trade show. These are sessions where you're going to learn and earn, fully narrated. This is where our strategies come alive. Bread and butter, out of the morning gate, the things that we do, right? We look at certain key parameters. We look at certain indicators that we look at. That's where we're going to discuss them and show you where they are and what they are, what to look for, and the combination of them. Again, there's no such thing as a forward-looking indicator, but we have a certain way of combining fundamentals, news. We have a certain way of combining that along with certain key technical indicators for a pretty strong likelihood of where the stock market is going to go. Trading room is hosted by us every morning, 9:20 to 10:30 Eastern time. We don't hold you ransom. You don't hold you handcuffed for the whole day. And if you've looked at our newsletter from a couple of weeks ago, we talked about the trading room, all the benefits, and where sort of the structure came from. John and I have both been in trading rooms in the past, and we took all the good that we've seen and eliminated the bad and combined it all to give you the very best that we can. Folks, if you can't make it to the trading room, it is recorded for later review. And all you have to do is to subscribe. Just click on, or rather go to the QR code. Snap on the QR code. That should take you to the page where you can get more information and actually subscribe. $24.95 for the whole year. What a deal. Or if you want to just take it for the quarter and try it, $6.99. That works out to, I think, about $10 and change per show, per session. And I think that's an excellent, excellent value for what you are getting. In fact, you can't touch that. Such great, great value for your money right there. You can ask questions, right? Get all the answers that you need in real time using real market data. So what it is, we show you our charts, exactly what we are looking at to trade. We use Schwab, Thinkorswim, and if you know what calls and puts are, you need to be there. I've had this comment the other day. Said, "Well, Hugh, I don't know the strategies. I don't know, so I'm not going to be in the trading room." I said, "Well, do you know what calls and puts are?" "Oh yeah, great. That's where you should be, because that's what we do. Is we teach you that stuff. Just sit back, learn, earn, right? And, ask questions, follow along. Don't get panicky if you don't understand what we're talking about. Ask some questions. Eventually, it's just going to snap. It's just going to snap. You're going to fully understand. You won't even know when you have picked up on it, but you will. You will. Okay, and I think that's really important. All right, and that's the best value too. So I really think it's a good idea. We have other programs too, but all our programs, by the way, offer a really amazing 30-day money-back guarantee. 30-day money-back guarantee, and you can't go wrong. So you have nothing to lose. Can't tell you any more than that. You got to be in the trading room, folks. All right. We also have other programs. We have, alert systems. We've got the DayTradeSPY Signal, and we also have the DayTradeSPY Pick of the Day and the DayTradeSPY Inner Circle. Okay. Um, at the end of the session, I will show you I'll get you the QR codes for that. Click on the QR codes. That'll give you more information and how to subscribe on those as well. All right. I'm sensing that there's not a lot of light. Let me see if I can turn this on here. Maybe that'll help a little bit. Okay, let's go on to some questions here. A lot of questions coming in. Okay, all right, let's go back to you. Good evening from St. Louis. Joined the master class, but missed 2 months due to medical problems. Any new special pricing on trading room? Any chance of how to take 2,000 and 10,000 3 to 4 month program? Well, Kurt, I mean, you can always take $2,000 to $10,000 in 3 or 4 months. It's going to be very aggressive. Um, we're very methodically, carefully taking profits along the way here. We don't have a special program just on that, but I think when you learn our methodology and pay attention, and you have adequate capitalization, there is no reason you shouldn't be able to. I had this conversation with somebody else. They only have $2,000. I said, um, if it's a cash account, and even if it's a margin account, you don't want to trade margin. If you can do a cash account, do a cash account in this business, um, and you'll be limited by how much you can trade if you start with $2,000. What you have to do, you can only trade the 2,000 that day, and even if you make $1,000, you can't trade that until your option trades settle, which is the next day. Okay, so let's say you invest 2,000, you get really lucky, you made $1,000. It's only on the next day that you can trade $3,000. Okay. But what I would suggest there is get with the program, paper trade, understand it while you're adding money into your account. Preferably, I would say you should really have probably $5,000 in your account before you start actively trading your real account. So you have that margin in there. All right. Um, you can make money. You can make a little bit of money trading a couple $1,000s, but you're going to get coffee money. Okay. Not much more than lunch money. And that's not going to be very inspiring for you. You're going to say, wait a second, I took all this risk and went through all the anxiety and all the stress to buy myself a hamburger, or a cheese sandwich. You're going to be disappointed. You will need capital. All right. I would say if you have $2,000, just save, keep trading in paper trades. All right. Keep trading paper trades, but I'm going to close. I'm going to close these two blinds so that it actually, I'm not in the dark. I sense that I'm in the dark here. I'm only lit by the fire in the fireplace. Let's see if I can get a fire going. There's the fire. Uh, see, it's one click of a button in the door, and there, and the fire starts. Funny how that works, right? Folks, you don't want to be undercapitalized, even though you're not trading the full $5,000. You just want to have that cushion in there. Okay, the cushion is very important. So. And once you start that, you'll start getting into the pattern. And, it might take you a little longer than 3 to 4 months to make 10,000 out of 2,000, but just start working up close, carefully, methodically there. Another question here: any reason I shouldn't trade the SPX by simply multiplying your recommendations by 10? Tax advantages, lower number of contracts to save on commissions. Well, I think the commission savings, Jay, is probably minimal, but if you want to try it, it should work for SPX just as well as SPY. I like SPY because of the volume, the liquidity, and all that. I have many years ago traded a little bit of SPX, and then when I discovered SPY, that's kind of where I went. I think most people like that flexibility and whatnot, but if you feel more comfortable with SPX, give it a try and let me know how that works for you. Okay, you should be able to do that there too. I know that SPX you're going to get option prices probably about 10 times the price of SPY. Now, if you're comfortable with that, if you're comfortable with paying, I don't know, whatever the price is at $20 a contract, it's up to you. But uh, I like the flexibility and that just the cheaper prices, I guess. And it's not like SPY cannot handle it. SPY can handle a lot of money in trades. I have traded over $100,000 in single trades on SPY in the past, and it filled me in a matter of like within a minute or two. So that's not a problem. SPY can handle that. So congratulations to Jeff D. Gotta love this guy. He's in our trading room, folks. Jeff D's in our trading room. He's been in our trading room for a while. And I'm finding that the people that have been in the trading room the longest, they're the ones that do the best. So I think there's a little gem in that. If you join the trading room, you want to stay in the trading room for a long time. It's not just something you want to go into, and stick around for a couple weeks and then get out of it. All right. The longer you're in it, that's the simple truth. The longer you're in it, the better trader you're going to be. So Jeff is reporting here that he's had a really good month, made a total of $14,743 in May. Awesome. Average of $743 a day in 21 trading days. Did 48 trades. Most memorable trades this month, made $1,000 in 7 minutes, made $980 in 90 seconds. Repaired a trade that was losing over 2,500 and ended up making $120. Nice comeback. Thanks to you and John and the great teaching and services. I started with the pick of the day in November 2023 and eventually became a Day Trade Society member in 2025. Jeff, that is so cool to hear. Thank you so much for that information. Jeff, I wonder if I can get that from you in an email with your permission to use those words exactly. And in a testimonial, you may have sent us a testimonial in the past. I don't know, but I'm going to, if I could just get a screenshot of that and maybe, if I get your permission to actually use that in testimonial, of course, when we're not going to use your last name, which is privacy concerns, but I think that is really cool. Congratulations. Congratulations, my friend. That is really good to see. So cool. All right, question. Where do you find the high and low volumes for each day? Um, we use Schwab Thinkorswim. It gives us that information volumes. I don't have it pulled up here, so I can't really show you, but it's on. It should give, any program that you're using should give you that kind of information. John H. had a big loss on the OMG puts. Okay, let's talk about OMG puts for a second. A few days ago, we were in the OMG trade. And I had this conversation with somebody on an email exchange. Let me see, is she online? I don't know. But the question was about staying in these puts. Okay, so the OMG is a trade. It says out of the morning gate. What we do there is we take a look at the support and resistance levels just before the market opens. And we try to be very careful where we select these support and resistance levels. So the first 5-minute candle to close outside of either the support or resistance level, that is the direction we are looking to go for a 6% gain. Now what happened was we had the OMG line to the support level, and the trade did close to the downside. But as I mentioned in this email exchange to this lady, I said, as much as statistically it works very, very well, but as much as we want to stay with the rules, personally, I hesitate going to the downside. And when I look back at my logs, I find that probably 90-some% of my losses or challenges even were with puts. We are in an uptrending market. We have been in a long time in an uptrending market. I really don't like to fight the trend. I think to myself, how high is this thing going to go? Well, the answer is, it could go to the moon and beyond, right? Figuratively speaking, of course. But I hesitate going to the downside because as sure as we're sitting here, it's going to find some level of support, then they're going to start pushing it back up. So then we're going to see about cutting the losses, right? Cutting the loss on these things. So I guess the rule of thumb there is just never invest more than you can afford to lose. If Be very careful. It goes to the downside. Do not leave your post, not even a washroom break. If you see it leveling off, finding support, maybe just dump it and take what the market will give you on that one. Markets have just not been going down lately. We're just in a nice uptrend. So that's the only thing I can tell you right now. Be very careful about the put side of things. And anyway, Kurt's telling me, you meant to take 2,000 to 10,000 in 6 months. Again, it can be done, but I'd be, very careful. $2,000, you'll probably maybe aim for $50 a day or something at the beginning, Kurt, rather. Okay. If you're starting with $2,000, that's a very humble start. Okay, and you don't want to, you don't want to put it all in. It's very tough to do that, but if you can just even get $50 a day, I think you're doing really well on that one right now. At least until you ramp the 2,000 up to 3,000 to 4,000 to 5,000. When you hit 5,000, then aim for $100 a day. All right, slowly bring it up. Slowly bring it up. Might take a little longer than 6 months, but eventually, if you keep doing good trades, you can do it. I don't want to sugarcoat it, but I think you do need some more capitalization. All right, what we're going to do now, folks, we are going to, let me take a look here. Okay, let me see. I think what I want to do here is, we're going to have our contest. All right, here's what we're going to do. Contest. I'm going to give you this. I've got my DayTradeSPY random number generator. It is all set to go. I'm just getting it ready because that's what we do. We have to prep the generator, right? Now, before I bring it up, okay, you do have, okay, Kurt's saying he does have 5,000. Okay, Kurt. Yeah, okay, so start with $100 a day, get a spreadsheet going, and $100 a day, and then when you hit when you go from 5 to 6, 7,000, start getting looking for $200 a day, and eventually you'll hit 10,000. You should be able to do $10,000 in 6 months. That should not be a problem. Okay, so if you want to email me, maybe, and Hugh G at DayTradeSPY.com. Keep me posted on that. I might be able to help you along that with a spreadsheet or something. Anyway, folks, right now, what I want you to do is in the questions box, I want you to write a number between 1 and 100. 1 and 100, and the closest to the random number will win the ebook, Triumphs and Tragedies. And I am going to bring up the random number. So I'll give you another 15 seconds to do that. I'm going to bring this up. This is not the number that you see here. That is not the number that's from last week or something, okay? That is not the number. The number is going to be, I'm going to hit a button and then we're going to come up with the number, okay? So, all right, so 5, 4, 3, 2, 1. Okay, I'm going to cut off all of the, okay, so the last one to report in here is Sasha. Okay, that's it. Nobody else. Sasha. Okay, good. All right. So nobody else now. Okay. All right. I'm good. All right. And by the way, if it's a tie, you both get the book. All right. So now I'm going to hit the button right here. 3, 2, 1. The number is 74. The person. Oh, where do I go? What happened here? Go back in. I lost it in here. Okay. Number 74. Let me see who is the closest to 74. Okay. Oh, well, guess what? We got ourselves a winner. John is 74. Okay, any other 74s? Let's see, take a look here. Looks like nobody else came with 74. Congratulations, John H. I will give you, send you the ebook, Triumphs and Tragedies. All right, that's good. Usually we get somebody very close, but not too often we get somebody right on, spot on. So, that's awesome. All right. Okay, folks, going to wrap it up here. Thank you for joining us. And I'm going to leave it here. These are the QR codes for the various programs we have. You really ought to check them all out because they're all very good. They're all very good. Very cost-effective way of learning how to day trade options on the SPY 500. Good night, everybody. It's been a pleasure.
I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, no play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you